some observations from me in terms of the sector and some of the sort of headwinds that I think we might experience. If we stand back from it and just assess where we are, there's a couple of slides that I think I put up this time last year. If you stand back from it, we've got a sector that's been helped by a significant tailwinds. We've got reduced bank liquidity. We're still in a low interest rate environment. Consumers still don't really trust mainstream banking. And we've got rapid technological change. We've got some big changes in technology. Who amongst your children is going to recognize those two things and actually link them together? And we've got some changing behaviors. Not a great picture, but actually the top slide is the Pope's inauguration in 2005. By 2013, slightly different perspective from the audience there. And growth. We're going to hear a lot today about growth. 1.75 billion lent last year through the platforms, 2 or 3 times the year before. And accelerating interest. As I stand and look around, we've got attendance figures up this year. I'm told that the AltFi site has 7 times the views this time versus last year. So massive amounts of enthusiasm for the sector. I was listening to those telecom analogies earlier. I was a telecom analyst for 15, 16 years, and I saw times of heady enthusiasm, shall we say, in the early noughties. And I saw some pretty high-profile blow-ups after that. So what next as we look forward? I'm still very excited about the sector. I think there's massive growth prospects. These are the end markets that some of those people you're speaking about are targeting. Invoice factoring, people haven't really scratched the surface yet, but is a $1 trillion industry. So I think we'll still see a lot of growth given the size of the end markets. Overseas expansion. We're here in the UK. It's probably a bit hard to see at the back, but the red graph there is the cumulative lending through UK platforms. The blue one is Europe. So a way to go in terms of overseas expansion. I think we'll see a lot more partnerships on both sides of the platform. So in terms of the supply side of money, we've got Mr. Champ, wherever he is, with 450 million at P2P Global Investments. Alt.Finance, with apologies to anybody I've missed, we've seen a range of institutions coming into the sector to lend through the sector. There is a wall of money at this moment in time seeking to be deployed. And that in itself causes problems on the other side. We've seen platforms not rush or scramble, but certainly make many, many moves to partner with big organizations that can help them with loan origination, whether it be accountancy firms. We've struck a couple of deals, whether it be providers of accounting software like Sage. The Alibaba agreement with Lending Club I thought was really interesting. I think we'll see many more of those. What really interests me actually in the future is, how long until those three, bottom right, actually start getting involved. Given that the data they have and the relationships they have, I think we'll see many more partnerships on that side of the platform equation. It's been mentioned earlier, I think we'll see, this is the year of the capital raise. If I stand back and look at what the platforms are seeking to do, they are all putting their pedal to the floor when it comes to expansion. That's going to cost money. We live in a world where you can turn on your TV and you'll see a funding circle advert. You get off your train in the evening, you'll see a rate setter advert on the hoarding, on the side of the track. We heard Anil talking about people. We're talking about overseas expansion. Regulatory costs are going to increase. So I think with the rush for scale comes the need for more money, both from public and private markets. I think it's a great time, frankly, to raise money, given the wall of enthusiasm. And we've all seen the Lending Club valuation. More data. This chart on the left-hand side is 1 minute, what we all do within 1 minute, whether it be Google, 4 million search inquiries, Facebook, 2.5 million users sharing information. So we are living in a world where more and more data is being shared every day. What does that really mean? Well, I think in terms of the way it's used throughout the platforms, at the top there, you've got some of the old, more established sources of data. But if you are let's take P2PGI. If you are a P2PGI looking to deploy 450 million quid through platforms, do you want to rely on company's house information that's 18 months old, sorry? Or what about the information that exists within eBay? What about the information that eBay knows about SMEs? I think we'll see greater use of smarter data and more partnerships being struck with providers, as you see on the bottom left there. So lots of enthusiasm, lots of growth, all good. What could possibly go wrong? Well, I don't think this sector is going to be immune from the sort of growing pains. I think your darling child of last year, who knows how she's going to turn out. Actually, the title for this speech, The Big Picture, actually got I think, added after I'd agreed to talk about some headwinds. If you want a big picture, I think that's it. Underwriting to overwriting. I think Ridyan talked about this, Giles talked about this earlier. With a wall of money being deployed through this sector, what keeps me a little bit awake at night is the risk that uneconomic business is written or that business is mispriced. Probably not, in all fairness, by some of the mainstream platforms. I think, if anything, greater marketing campaigns, greater awareness could bring better quality borrowers onto their platforms. I'm more worried about the platforms, the newer platforms that don't have the scars on their back, that companies like Zopa have, that have been around for a long time, that don't have that capital base, that don't have that scale, that aren't able to recruit quality credit teams. I'm more worried about them. If I walked out in here, set up a platform tomorrow, I'd be worried about the business that I would write. Regulation. We've got, now all the platforms have welcomed regulation, sought regulation. It brings transparency, it increases awareness. But I think we have to stand back from it and say we've got 3 or 4 events coming. And I've listed some of them here, whether it be client assets, consumer credit. The third one there, platforms have for some time needed to have systems and processes in place such that should they go bust, they can point to an orderly runoff. Now, that requirement hasn't changed, but with the move to ISAs, you have to think that, well, certainly we're working with a lot of platforms to try and actually help them in that respect. And also marketing communications were touched on earlier. We've got a regulatory key date coming up next year. Frauds and failures. This is a chart I put up last year. This sector will be no different from any other sector. There will be frauds, there will be business failures. It just depends how the industry as a whole prepares itself for that. Cybersecurity. This is a chart from a CEO survey we did, not across this sector, just across the global sector. In banking, capital markets, 79% of CEOs see cyber risk as a big threat. Cyber threats are the biggest. If you stand back and look at the multiple sectors we surveyed, the cyber threat is the biggest risk, or biggest concern, rather, of all the CEOs we surveyed. Nobody wants these headlines. We now have ethical hacking teams in at 10 platforms seeking to understand a little bit more about the resilience of those platforms to getting their customer data stolen. And often, by the way, it's not somebody just having a go from afar. In a lot of cases in other industries, it is a disgruntled employee. We talked about the importance of people earlier on. It's a disgruntled employee. We have teams that say, give us a laptop, give us half a password, let's pretend we're a disgruntled salesman, let's see what damage we can do. I think the cyber threat is one of the biggest threats to this sector going forward, given the amount of data that it has. Now, haven't been so gloomy. That, I think, is the goal. Another chart from last year, that's Amazon's Kindle books versus physical books. We are right down the bottom of that orange curve. I'm very, very excited about the industry, but we just have to be aware of some of the headwinds that are coming.